Hi everyone, and welcome to Philanthropy Impact's Walk in My Shoes series for professional advisors. My name is Zofia and I'm the Director of Membership and Development here and also your moderator for today's session. This series has been set up to empower already trusted advisors to give the best advice possible to your clients around their philanthropy and social impact investment journey. And today we are exploring donor advised funds as a vehicle for giving and how you can understand if they're the right option for your clients. It gives me great pleasure to welcome Ceris Gardner, partner at Maurice Turnor Gardner and also board member of Philanthropy Impact, as our chair today. And joining Ceris, we have Sarah Farrow, who's partner at Hirth, who's also a board member of Philanthropy Impact. And from the US, we have Julie Rubenstein, I hope I've said that right, Philanthropy Advisor from the Philanthropy Centre at JP Morgan. And finally, our CEO, John Pepin. Thank you all for joining us today. As this is a quick 30-minute session, we ask that you use the chat function only for comments and questions. Please do introduce yourself. We would really like to hear your thoughts on the subject. I also see that we have UK DAFs in the audience, so please do share info about what you do in the chat. And I'm available there if you need me. I will now pass over to Ceris to make a start. Thank you, Ceris.
Okay, thank you very much everyone for joining us today. Hope you find the session useful. The really important focus of today's webinar is to look at how DAFs can be used to help professional advisors help their clients, because one of the things that I've noticed in my experience is that DAFs are still unknown, relatively speaking, in the UK in comparison with the US. That's one of the reasons why it's so helpful to have Julie with us, because she'll be able to tell us about the US experience of DAFs over decades, whereas I only really came to know about DAFs when I was sort of knee-high to a grasshopper, not quite, but about 7 years ago, 6-7 years ago. Before that, I'd heard of them, but I didn't really know how they worked. So one of the things I'm going to start off with shortly is to explain just what they are very briefly. But John, before that, I was very interested to see that Philanthropy Impact have embarked on a research project into DAFs. So is there anything more you can tell us at this point?
Yeah, we've run events over the years about DAFs because we're concerned, again, as you are, about professional advisors not being totally aware of them. And there are some advantages to doing DAFs for certain kinds of levels of wealth. So we've decided to have a page on our website that actually lists every DAF and to discuss what they are, some of the key characteristics of them and that kind of thing. So we're not going to say one's better than another, it's just going to be a straight description. So I'm going to list the DAFs that we know of, but the other thing to keep in mind, on the 18th of November, Ceris will be chairing a webinar for 1 hour with, we hope, all the DAFs join in, and so there'll be like a show and tell. But I'm going to list them now, and if I've missed anyone, someone please send an email. But there's the Master Charitable Trust with C. Hoare & Co. There's a Charities Aid Foundation. There's NPPT UK. There's Prism the Gift Fund. There's Stewardship. UBS has one, Shared Impact, Community Foundations, and Prosper World. So if I've missed someone, please let us know. We will be in touch. I'll be emailing each one of the organizations to introduce our researcher. I'll be doing that in the next week or so we can start that process, because we think it's important that everyone's aware of what they are and who they are.
Thanks, John. That's really helpful. I hope you can join us on November the 18th then. Just very briefly, what is a DAF? Donor Advised Fund is the full name. And it took me many months to understand what they were, partly because people bandied the word about DAF. I hadn't got a clue what they were talking about, which is why I became a trustee of one, to find out how they worked from the bottom up, as it were. So the very easy way of thinking about them is an umbrella charitable trust. So the DAF itself is a charity, and you, the wealthy or ultra high net worth, depending on your level of wealth, person, you donate your money, let's just use cash for the moment, it can be other assets too, to the DAF. And the DAF looks after that money for you, and you then decide at a later point how you want the money to be distributed to charities. It buys you time it buys you flexibility. It's a very simple concept in reality, and of course it saves an enormous amount of administration time for the individual or family concerned who are setting up their DAF account. Now, why is it important? Let me tell you this story. One of my colleagues, and it wasn't me, but it was one of my colleagues who I will not name, when we are approached by a client who wants to talk about charitable giving, they ask, well, what are my choices? You know, what can I do? Well, of course, there's the straightforward gift to a charity, which a lot of people forget. But there are three main structures for forming your private foundation. So there's a charitable trust, there's a charitable company limited by guarantee, and there's the charitable incorporated organisation, CIO for short, which is the Charity Commission's own creation and saves a bit of bureaucracy. However, in addition to that, there are DAFs. And one of my colleagues, several years ago now, before we were all educated, left out any mention of DAFs. So the client went away, having heard about, you know, charitable trusts, CIOs, CLGs, and then in high dudgeon rang up a few days later and said, when we met the other day, you didn't mention DAFs to me at all. You know, what's going on? So of course, clients are starting to be aware of DAFs and what they can do, and people are talking to them about DAFs. So we, the professional advisors, had better be well prepared to talk about DAFs ourselves, it seems to me. So John, I think it's a very good thing to be doing this research project, because it can only help for everyone to know what DAFs are available out there and how we can help our clients to be directed towards them when they're the right vehicle. One of the things I wanted to do today, with the help of Julie and Sarah, is to find out what our different experiences are in terms of how our clients using DAFs and how are professional advisors able to help in directing them towards using DAFs. Obviously, my sort of story is just one example of where people have heard about them, but don't necessarily, their professional advisor hasn't actually mentioned them, which is obviously a bit of a cardinal sin these days. But Julie, what in the US, it's obviously so much more of a well-known charitable vehicle. What do you find your clients are doing? What are professional advisors doing to help clients towards potentially using a DAF?
Sure. So I think, you know, as you mentioned, donor advised funds are very much in sort of the advisor vocabulary now when it comes to guiding on charitable structures. So where I sit as a philanthropy advisor, you know, we are laying out the various considerations rather than sort of recommending any one specific structure. But what we try and do is walk donors through, you know, not only the estate planning considerations, but, you know, what are the other major things that you need to think through? Everything from control to administration to privacy. And there's a number of reasons why I think donor advised funds are, you know, increasingly popular giving vehicles in the US and the UK. So I've seen, when it comes to kind of helping clients understand the right vehicle, we've seen people that are at the early stages of their philanthropy that are just starting out, and they want sort of an account that's easy to set up, something that's administratively easy and sort of not taxing from a time perspective to be able to facilitate donations. Maybe they aren't sure over the long term what family engagement will look like in terms of philanthropy. So they want to start with a donor advised fund. And that's actually a client that I'm working with right now. They're actually using a DAF almost as a testing ground for the family philanthropy. And then ultimately, when they see, you know, what the family engagement really looks like, they'll think about a private foundation. You know, we see people that are opening up DAFs instead of private foundations for the reasons that we've talked about, like, you know, the ability to be anonymous, you know, not having to file the annual tax returns every year. And they're actually using their donor advised funds similar to a private foundation structure. They're having meetings, they have a grant making process, but it's just sort of more administratively easy for them. You know, and then from a US perspective, and I can touch on this more later, we're seeing a lot of donor advised funds used in complement with private foundations for reasons like ease of international giving, for the, you know, the reason that US foundations have a minimum annual distribution requirement. So we see a lot of people use donor advised funds for that reason as well. And I think, we're seeing even more kind of innovative uses of DAFs as well that I'm happy to speak to at some point.
Yeah, I'd love to come back to that point. One of the things you also mentioned was they're being used more in succession planning. So next generation, introducing the next generation to philanthropy and so on. How does that work? How does that work through a DAF? What's the way that you're seeing clients using DAFs for succession?
Sure. So, when it comes to kind of next generation training, we've seen people set up donor advised fund accounts for children, for future generations, with their children named as the advisors on those accounts. So it's a bit of a training ground. It not only gives them a chance to kind of practice philanthropy and start making donations, but also to understand investments as well, without kind of, displaying the full family balance sheet. So that's one use. When it comes to families that have decided to use a donor advised fund as their primary vehicle, there are different options depending on the donor advised fund provider in terms of succession planning. So, you can name successor advisors to be, the advisors on the accounts once the founders are no longer here. That's one option. You can also name specific charities and the amounts that you'd like them to receive. And then some providers will have actually endowment offerings where you can specify a certain amount to be donated to charity annually after your passing, so that your giving can continue and the assets in the account can continue to grow. But I think the most important thing to remember with donor advised funds is, ultimately the assets are at the sponsoring organization, and that organization has ultimate discretion. So when it comes to thinking about succession and preserving intent, we talk a lot about having those conversations now with your family, with any future decision makers, codifying any intent or vision in, a separate document that's not sort of, enforceable in any way, but can help the family to build a culture of giving together. And have future decision makers understand the purpose of these charitable funds.
Thank you. That's really interesting. Sarah, are you recognizing any of that in terms of your clients?
Yeah, absolutely. I mean, at Frank Hirth, a lot of our clients are, US people who are living in the UK as well, and so donor advised funds are hugely popular with them, just because the US people who are in the UK often would like to get relief for their charitable donations in both jurisdictions. Obviously, if they make a donation to a UK charity, provided they tick the right gift aid boxes or do whatever they need to do to get the relief, then they'll get the UK relief, but they wouldn't then get relief in the US. And so a lot of donor advised funds will have American funds which are dual qualified, which work where you broadly you give to the UK charity, but the UK charity is a disregarded entity for US purposes, and the UK entity is owned by a US charity. And the way they work means that you get relief for UK tax in the UK, and you also get relief for US tax in the US. And they work very well for Americans in that scenario. I think where we've seen Americans come unstuck is where they want to make gifts to a charity which is based in the UK, and there are quite a lot of bigger charities in the UK who also have a US charity as well, because they kind of market to Americans. But often you find that those charities, they have two separate charities. They have a UK charity and a US charity, and where people fall down is is it that the charity they can see is in the UK and they know there's a US charity, they make the donation to the US charity thinking they're going to get the deduction, to their horror when they come to their UK tax return that actually they're not going to get the relief. And so in that scenario we see them used a lot.
That's interesting. Julie, one of the things you mentioned was control, and I'm wondering whether in the US, do different DAFs well, control goes two ways, of course. A lot of the clients that I talk to, they're most anxious to know that they, the donors, have some control over how their funds are invested, you know, how much control they have over who gets what, and by way of donations, that sort of thing, which I know all DAFs will do that. But are there any other issues on control, such as, you know, are there any DAFs that you know of who don't really give that flexibility to the donors? Obviously, they would give them flexibility over who to donate to, but in terms of how the assets are managed, for example, are there any differences there? I'm not aware of any in the UK, but there may be.
Yeah, no, it's a good question. I think from the most part, from what I've seen from the DAF landscape in the US, you know, it's fairly similar. I think that, you know, in terms of investment options, you know, as long as they're prudent investments, you know, the donor advised fund sponsoring organization will have, you know, a fairly vast suite of options in terms of suggesting donations, as long as it is, you know, a qualified charity. I haven't seen issues come into play around, you know, being able to suggest any donations that might not ultimately go through. I think, you know, maybe where the differences lie are just in kind of experience, depth of experience and breadth of experience in terms of, you know, making international grants, for example. Yeah. A number of, you know, more national providers might have more experience doing that. So I think in terms of the control issue, it's you know, fairly similar across the board from what I've seen, but I think control is one of the kind of key decision points when it comes to foundation versus DAF. And I think many people think that, you know, level of wealth is the only indicator. I think that's a common question I get, is the level of wealth and amount that is, you know, ultimately going to be donated to charity is the key deciding factor between vehicles. But I think we've seen that that's not actually the case. There are a number of reasons that people choose donor advised funds or private foundations aside from that.
Yeah. So as professional advisors, then how are we presenting DAFs to them? I mean, I mentioned the one where we didn't present a DAF and were told off for not doing so. Sarah, when somebody comes in, one of your clients or prospective clients comes in to talk to you about giving, philanthropic giving, how do you introduce the topic of DAFs? Is it part of an estate planning conversation, for example, or what would you say would be the norm?
The most recent example I've had is a not American this client, but a non-dom in the UK who was making a really substantial contribution to a university in the UK, but she didn't really want to use her kind of clean taxed UK money to do it. She had lots of offshore monies that, because of the tax regime she was under, perfectly legitimately hasn't been taxed in the UK. But the university, they didn't have any offshore accounts that she could donate to, which would have meant she wouldn't have had to pay tax on the money. So if she'd have made a donation directly to the university, she would have had to pay tax to remit the money to the UK in the first place, and then she would have to pay it to their account. So it would have potentially cost her 45% tax just to get the money into the country in order to make the donation. And what some donor advised funds offer is they have offshore accounts, so in the Channel Islands or, you know, other jurisdictions, so that you can make your donation, which will still qualify as a charitable donation, but you can make it to the offshore account, and therefore you avoid having to pay that 45% tax to bring the money into the country in the first place. And then obviously the donor advised fund can then pay the money on without any remittance for the client. So that's a really nice way in which donor advised funds can be really useful to bring money into the UK and, you know, save that client that 45% tax, because potentially, you know, it might have been that she would have made a smaller donation because of the amount of tax she'd have had to pay. So this kind of maximizes the amount of money that then goes to the charity in the UK.
Yeah.
Other examples are kind of families where you see some families who they want to set up a charitable trust and they see it as a kind of a family project, something they can all do together. But then you get other families that that kind of level of engagement isn't there really with the rest of the family, and therefore a donor advised fund is a kind of a simpler option, which would mean that the administration and everything that goes with kind of running a trust, they don't have to worry about that. They can just concentrate on working out where they would like the money to go.
Yeah, I find that's a huge attraction. Sorry, John.
Am I on? Can you hear me?
Yeah.
I have a question. It's around transparency, because I've heard that some very wealthy people, ultra high net worth, they have their own foundations, but they also may set up a donor advice fund account because then they can give to certain things that's not transparent. Is that some of the things that Sarah, you or Julie are seeing around, and is transparency an issue?
Certainly. I mean, I can speak from a US perspective. I think, that is increasingly, given the current social and political environment, especially, one of the reasons why people do like to use donor advised funds, because they have the option to give anonymously, whereas, as we know, private foundation filings, report on trustees, report on every grant that's made. So, we're seeing a lot of, Mark Zuckerberg has a donor advised fund. Mackenzie Bezos just gave away $1.9 billion through a donor advised fund. She ultimately disclosed the organizations, but chose to use that structure. So we're seeing a lot of philanthropists who would potentially be in the limelight choose to use DAFs in order to give anonymously and maybe not receive sort of solicitations for funds. But also, I think it is, also driven by, this sort of, I guess the scrutiny around this is very real. And there's actually, the IRS in the US is looking into the ability to be able to move money from private foundations to donor advised funds right now, because there's, there's the sort of people who are questioning, are donor advised funds just holding wealth rather than getting it to working charities? So the transparency piece is a big, I think, attractive attribute of donor advised funds. And now we're at this point in the US where that is coming into the limelight a little bit, given the nature of charitable donations, typically being transparent through private foundations.
Interesting. Yeah. Sarah, are you seeing anything like that in terms of clients looking to move funds to a donor advised fund from a charity? I haven't seen that here, I must say, at the moment.
No, I haven't seen it yet, and I wonder if that's partly because people are less aware of donor advised funds, but also I'm not sure. There's not so many people in the UK who give on the same kind of scale as people do in the US.
True. That's very true. Yeah. John, did that answer your question sufficiently?
Yes, it does. Thank you.
Great. One area that really interests me, and I know Philanthropy Impact is doing a lot of work on it, is cross-border giving. US, UK, we've in a sense, we've got some vehicles available for people to make that really tax efficient and flexible and so on. The other side, of course, is European and Brexit coming up. I don't know whether either of you have any views on whether Brexit's going to make any difference to donor advised funds in particular, philanthropic giving in general. Have you had any thoughts on that? Sarah, what about you first?
Yeah, I meant to look before I came on, but I didn't. Obviously at the moment in the UK, you can make a donation to a UK or an EU charity and get relief in the UK, and therefore I do see European clients who make contributions to European charities, and presumably when we leave the EU, that relief for European charities will go at some point, and then the incentive to make direct contributions to EU charities will kind of fall away. Although potentially under a DAF they would still be able to make those donations by making them through a DAF. So yeah, so that might kind of fill that gap a little bit there.
Yeah. I mean, it might be quite a boost for DAFs if that works. in terms of
Yeah.
giving on to the continent. I don't suppose you have so many concerns about Brexit as we have over here, Julie, but have you come across the question really?
Yes, we have our own concerns over here. But I think, you know, what we saw, if it is a helpful lesson at all, is before a lot of the tax changes, the tax law changes that happened in the US in 2017, giving to DAFs increased because people were doing tax planning in advance. So we saw sort of a spurt in giving to donor advised funds before the tax changes came into effect in January 2018. And from an international giving perspective, that is another sort of feature of donor advised funds in the US that I think is something that draws people to DAFs, because when you make a gift in the US to a foreign charity, you have to do an additional piece of due diligence, and you can use one of two methods, and most donor advised fund sponsors can do that for you. So when we have clients who want to give primarily abroad, we do see donor advised funds as a vehicle they consider.
Okay. Oh, interesting. Yeah, that makes sense. That makes sense. John, I can see that we're getting close to past.
Yeah.
Do you want us to look at, are there any questions coming in? Because I haven't seen anything.
Here is a question. Do you think the rise of DAFs will result in a reduction in the number of new charitable trusts and foundations created?
That's a good question. I'll tell you why I think it's a good question. The Charity Commission is quite keen to see the number of charitable trusts reduced, because there are about 180,000 of them or something on the register, and they've been conducting a campaign for some time to try and get charities with similar objects to amalgamate and, you know, join forces for, you know, all sorts of reasons, but to try and limit the number on the register. But I don't see any sign of that stopping at the moment. It's still a stark choice between, have you got time to run your own charity and therefore you'll want your private foundation very often, or if it's going to be operational rather than grant making, then you'll set up your own private foundation on the whole, although some DAFs will allow that to happen as well, versus the DAF where they take all that off your hands. So if you're short of time, then I think a DAF is definitely the answer. But I'm not sure if it'll do much in terms of preventing charities being formed.
Ceris, we have 2 minutes left.
Okay.
One thing that I find really intriguing, I'm going to ask each of you for final words of wisdom to encourage people around, advisors, to know more about DAFs. But I find really intriguing, we just received a pretty significant donation from someone who lives in the US. And I had never thought of DAFs because we run a lot of events. We've always thought of it from the philanthropist perspective. We have never looked at it from the recipient perspective. And so it was really quite fascinating for me to start to go through the a process of arranging for the money to get over here. So sometime it will be good to explore that. Julie, Sarah, have you guys from your end ever had discussions from the charity perspective, and especially around cross-border giving and some of the extensive forms that one has to fill out? No?
Thankfully, I haven't seen that yet.
Okay.
John, all that I've seen is when they tend to work together. So if a donor knows the destination of his or her gift, ultimately, let's assume that a DAF is the way of getting it there, then usually they'll work together in a fairly, I think a very collaborative way to try and get the best deal, the best result for both the donor and the recipient charity. And that's my experience.
Well, the level of due diligence is really quite impressive. Julie, did you want to?
Oh, I was just going to add, I think, you know, less from a sort of paperwork perspective, but one thing that I think is interesting that we're seeing in the US now is this desire from donors to not only have confirmation that the charity they want to donate to from their DAF is an approved, you know, qualified charity, but also that it is, you know, a effective organization. So we're seeing donor advised fund sponsors starting to build out capabilities around due diligencing charities beyond just the standard checks, and offering services like landscape analyses and even sort of suggesting organizations for donors to give to. So we get a lot of questions from clients on that end as well. of how can we generate ideas of where to give. So I think that's kind of the next stage of donor advised funds, at least from a US perspective.
Interesting.
I'm in control of the timing, so Sophie, you can't cut in yet. We're going to go over a couple of minutes, but could each one of you, maybe starting with Julie and then Sarah and then Ceris, just give some 30 seconds final words of wisdom?
Oh, sure. I think, donor advised funds are increasing, I think the fastest growing charitable vehicle, at least in the US. So important to kind of understand them. I think the sort of various characteristics of why clients like to use them are undeniable, but even understanding how they can be used in complement with other organizations, is also something to consider. They don't have to be one or the other. So I think that they're very much kind of part of the landscape and will continue to be so.
Thank you. Sarah.
I think that the advantage that something like a donor advised fund has over something like a charitable trust is that they are open to a much broader range of people, in that you don't have to be high net worth, ultra high net worth individual to have a donor advised fund, and you can make a significant difference by using a donor advised fund, because it might not be that your contributions each year are substantial, but if you can roll up those contributions over a few years, you can make a significant donation to a charity that can help them with a particular project that you're really interested in a way that perhaps you wouldn't be able to without the use of a donor advised fund. So I think they are they're really helpful for a much broader range of people potentially than something like a charitable trust would be.
Oh, thank you. Ceris, final word.
Yeah, I think that's fair enough, actually. Very good point. And also thanks to Julie, that was a really good idea as well. My big thing with DAFs is that we don't understand them enough in the UK yet. And everyone knows this is my hobby horse, that, we need to get educated. We need to gain that awareness. Yeah, I know some professional advisors do understand them well and do promote them to their clients when appropriate, but I don't think by any means enough of us do. And so let's get organised, let's get membership of Philanthropy Impact, and let's get educated on this area.
Thank you, Ceris. Okay, thank you, Ceris, Julie, and Sarah. Over to you, Sophia.
Yeah, thank you all for a really interesting session, and to the DAFs in the audience for sharing your information. That's really useful. Thank you. So join us this Wednesday morning for the last in this year's series of the Philanthropy Programme, our joint initiative with STEP. We're going to be looking at impact investing trends resulting from the pandemic and its effects. We have a really great panel, so please do follow the link in the chat to take a look, or drop me an email if you'd like an invite. And of course, we'll be back next week with another Walk in My Shoes. Have a great week, everybody. Bye-bye.
Thank you.
Thanks, everyone.
Thank you.